Alright, quick update on Step app ticker symbol FITFI. So let's see what's been happening since the last video. We made an update for this. I believe this was yesterday we updated this. Yeah, it was yesterday. We were predicting a move down to 5 cent. Now bear in mind, at the time of recording this, I was saying this was more of a slightly longer term prediction, as in to come into fruition within the next week or two. However, literally within 24 hours, you know, this was once again about a 28.5% move. We came down about 22.5%. So we've almost hit the target, even though it's literally been 24 hours or so, which is obviously great. But nonetheless, I did just want to give you a quick update because since then we have had a slight bounce. And if you look at the 4-hourly time frame, or specifically if you look at the daily, it looks relatively okay since we've had this tiny bounce. I mean, we're in the green today, and I imagine a lot of people might be thinking that, you know, we might have found the bottom, but in my opinion, looking at the momentum indicator, daily squeeze bomb has just started to tick over to the downside. Looking at the volume, yes, we've had a day worth of a breather so far, but we still do have exponential selling volume increasing day over day over day. So at this moment in time, I wouldn't necessarily think the bottom is in. For FITFI, I do think we are going to go lower before we do kind of have that trend shift. Now, looking at the volume as a whole, within the past, well, since the 4th of June really, so the past week now, we have had an interesting increase in volume. It's been a very slight increase in volume, like, don't get me wrong, it's been nothing too crazy, but the volume is stepping up, and this volume is predominantly sellers. I imagine if we switch over to the Heikin-Ashi candles, 4-hourly time frame, clear up the chart, you can really see volume is exponentially increasing in favor of the bears. Looking at the Heikin-Ashis as well, like, every now and then you do see, you know, we have these little moves back up, sometimes to the 4-hourly EMAs, sometimes it doesn't always quite make it to the 4-hourly EMAs, but nonetheless, we are still in a sea of red. I do not think this is the time to be expecting a trend reversal. Once again, could be wrong, I don't have a crystal ball. However, the prediction from the last video did pan out quite nicely, so I'm still thinking we're going to go down hourly time frame. It looks like we're starting to subside, and these candle wicks to the upside being pushed down by sellers. Looking at this on the Heikin-Ashi, you can see, you know, sellers pushing down, sellers pushing down, sellers pushing down, sellers, and then you trip back over. And you can see right now on the 1-hourly Heikin-Ashi, we are kind of trickling over into that phase where we might be rolling back down already. I do think this is probably going to come into fruition. For that, keep your eyes on Bitcoin, because Bitcoin right now is sitting at a major area of support, and I would not necessarily be surprised if it does have a dead cat bounce before it breaks down. But once again, on this channel I try and focus on the slightly more mid to macro moves. I really don't care what happens 4 to 8 hours after I post this video. I don't necessarily, like I say, you know, I wouldn't be surprised if we came up into the top of these 4-hourly EMA ribbons at 6 to 7 cent, but this is not what I am predicting. I can't emphasize that enough. Yes, we can have a slightly bigger move back to the upside before we do have a retrace. That's not what I'm predicting. I'm very comfortable with my prediction that we are going to be landsliding down to the 2.618. At that point in time, we would really have to see how we react to the price, because the next level down, at least in terms of this fib, is all the way down here at 3.7 cent. And unfortunately, we are in price discovery to the downside. So this is really the only target that we have to run off right now. If we put this in the inverse scale, as I always do, if you are breaking into price discovery to the downside, it's sometimes best to put it in the inverse scale, so you can kind of just look at this chart from a new way. But you can see, you know, excluding the mint price, we came down, made a new all-time high, or this was your all-time high, you know, broke down, accumulated, we were running up on the EMA ribbons being supported by them, came up to the, almost up to the top, came back down, held the 13 EMA support, started to rally. Once again, you can see where we reacted to quote-unquote the previous all-time high, at least on the inverse chart. We broke down from it, you know, we accumulated below it and then blasted up. And at this point in time, I didn't actually notice this, which is why I think it's a great reason to go over to the inverse chart. I really don't do it just for the memes. I do it because it actually does help you see the market from different perspectives. And what you'll notice is this is something that I didn't see before, but subsequently, after breaking above the previous all-time high, what do you notice? We have these bull flags. You know, this was the break above the all-time high. We bull flagged above, came into the EMA ribbons, bull flagged above, and now we're coming down. So once again, do not be surprised if we do come down to the EMA ribbon, bounce on it before we do probably initiate something like this, before we do our next bear flag. In my opinion, this is probably the most likely scenario, where we come up, we hit that 5 cent target that we were talking about, you know, we kind of lollygag underneath 5 cent, and then we're going to have to see if we do break to the top of another bear flag, we might be going down to the next price target. And once again, I will give you that price target if we do flip back the chart. Let's see what's going on here. So once again, you know, I really don't use the inverse chart just to like meme and troll. I really do it because it does help you see the market in different perspectives. Like, I literally did not look at these and think, this is a bear flag, this is a bear flag. I did not see it. But as soon as I inverted the chart, I was like, okay, that's a bull flag. And obviously on the inverse chart, that is a bear flag. So I really do recommend, especially when you break into price discovery to the downside, or if you break in price discovery to the upside, whichever one you want to do, pick your poison. Definitely inverting the chart. Obviously all the prices stay the same, all the fibs stay the same, all the moving averages stay the same. You're just looking at it upside down basically. And with that being said, I do think we are probably going to break back down to the downside. So honestly, this is really a continuation video from yesterday. So I'm probably just gonna, you know, title this video like inverse chart theory, or, you know, something like that. But nonetheless, it looks like we're gearing up for that next move to the downside. We are currently, well, you know, quite recently we have come back up to the 4.236. We almost came up to the 1.618, and we came into the EMA ribbons on the 1 hourly time frame. So it seems pretty clear cut to me that we are gearing up for that next move to the downside. Once again, just my subjective opinion, but this level that we're at right now, I do find it very, very hard to believe that we would be holding. In my opinion, once again, Bitcoin looks like it is about to break down from 28,500. Now, once again, I do not care what happens in the next 4 hours, 8 hours, 24 hours. Even if we do break down, even if we come all the way down to, you know, 27.5 thousand, I'd still be saying, okay, I want to see a retest of 28.5. I want to see daily closes below here, because there is nothing that can happen in the next 24 hours short of Bitcoin capitulating below 25,000 that would, you know, make me very, very confident that that move would be happening. With these macro charts that we are panning out, we need more than an hourly push below support / resistance. We need more than 4 hourly candle body closes. We need daily candle body closes with volume confirming the breakdown. This is what I'm waiting for Bitcoin, and specifically for Bitcoin. You might be wondering why I'm talking about Bitcoin in a FITFI video, but the fact of the matter is, I think Bitcoin is coming down 20.5%. The fact of the matter is as well, the altcoins follow Bitcoin. And that being said as well, the cherry on top of the cake is the Bitcoin dominance is on basically a bull run right now. Bitcoin dominance is heading up massively. So if you do see the Bitcoin dominance continuing to run up to the upside, it's simply going to mean if Bitcoin drops 10%, then FITFI is probably going to drop 20, 30, 40%. So I do not think this is going to be the bottom, unfortunately. I really don't think 5 cent is going to be the bottom. You know, once again, this is why I say we predict one move at a time, and then we look at how we react to these prices. We look at the market day in, day out, because none of us have a crystal ball. Things change. Like a couple of days ago, no one knew what the CPI was. And today, you know, no one knew that we were going to come down to 28.5. This is a game of probabilities. Nobody knows for sure. Unless you've got a crystal ball, then, you know, for real, then hit me up, because I would definitely enjoy a crystal ball to navigate these markets. But nonetheless, based on my TA, based on my gut feeling, based on the charts, based on, you know, the CPI, which links to how consumers and how individuals throughout the US and throughout the entire global economy are feeling about the markets. When you get these negative swings and, you know, investor sentiment switches over to bearish phases, in my opinion, at this moment in time, we're shifting off into a risk off phase in the market, which means people are exiting the stock market. You can see stock market's massively dumping. People are jumping into the dollar, because this is exactly what risk off phases are. And look at this, even gold is up 1.25%. When gold goes up 1.25%, we're probably in a risk off phase. You know, sometimes this happens in bull runs, but nonetheless, you know, I'm kind of just joking with this one, but the DXY and this SPY going up is no joke. So, you know I'm talking about the stock market, I'm talking about the dollar, I'm talking about what Bitcoin's doing and the Bitcoin dominance is doing in a FITFI video. Some of you are probably already turned off, some of you probably clicked off already, but the fact of the matter is, because these all affect what is going to happen in FITFI. So like I said, I think, you know, once again, let's watch this move pan out, because as of this moment in time, we have only come down 16% as of the time of recording this. We did actually come down 23% since I made this video yesterday, but at this moment in time, we're sitting at about 16% drop. So my next move down after we do break below 5 cent, if we do break below 5 cent, because once again, we are kind of heading in that phase where we're probably about to break out of this bear flag. And if we come down to 5 cent, do not be surprised if we do something like this before we have our next major move down. This is kind of what I see playing out into fruition, but nonetheless, it could happen a million and one different ways. I don't want to predict every hourly candle. I don't want to say, you know, we're going to do this, and we're going to do this, and then we're going to do this, and then we're going to do this and this. The fact of the matter is, I'm saying in the next couple of weeks, in the next couple of days, whatever it's going to be, I think 5 cent is probably on the table this week, but more specifically within the next couple of weeks, 3.7 cent is now my price target. The next level down from that, you probably will not be happy to know, is 2.8 cent. And once again, this is not what I'm predicting at this moment in time. This would be a 53% drop. This is completely likely. I mean, like I said, this is not my prediction at this moment in time, but this is a move to earn crypto. Move to earns are not built to survive bear markets. So I may make a separate video about how move to earns work, because I'm sure a lot of people maybe don't actually know how move to earns operate. If you understand how move to earns operate, you know that they're not built to survive the bear market, because they need a constant new flow of investors to keep their project up, because they run on high tokenomic inflation to run rewards. I'm going off on a tangent, but nonetheless, that is all I've got for you for FITFI. Keep your eyes on 5 cent. My opinion from the last video has not changed. 5 cent is still on my mind. If we do break below 5 cent, 3.7 cent is the target I have. Wrapping up the video, keep your eyes on the Bitcoin dominance. While the Bitcoin dominance keeps on going up, Bitcoin is going to keep on outperforming altcoins. It is not time to buy altcoins until the Bitcoin dominance tops, and I do not think the Bitcoin dominance is going to top until we come up to 60%. So all I've got for you today looks like another leg to the downside is likely, as always. Not financial advice, cowboy out, and most importantly, peace.